Good morning, everyone. Welcome to my morning forecast. 3 pairs on watch for today: Euro dollar, Aussie yen, and pound CAD. There is some red pound news, I believe, this morning, and also we have PMI this afternoon. PMI is red news as well, and there can sometimes be some volatility with PMI, more shorter term, but I have seen it where it can wick quite a bit both sides pretty quick. So just be aware of PMI this afternoon. If you're in any trades or looking to execute on any trades, then just bear that in mind, because you can get that slight volatility wick both sides, and you don't want to get caught out with that. So just a heads up for those kind of two pieces of main news. In terms of the DXY, we can see that we've potentially reacted to some kind of area on the left, but we do have this 4-hour base that we've wicked through, and we're now starting to push to the upside a little bit. So it could be that this is still part of the impulse, and then this is just a pullback into this base to either develop a larger flag for the long, or this is just acting more of a kind of pullback into this area, and then we're just going to get the next push. So if this base holds, then obviously the DXY is going to go long, and euro dollar will most likely sell off if that's the case. And euro dollar is sat in an area where we can get development for buys, but it can also drop through and turn into a sell. So that makes sense with where the DXY is sat, that this is either going to hold as a base and we are going to get that move off, and then it'll be a case of, are we getting a top for this, or is this the move for it to just continue higher, or are these areas on the left that price has kind of come into, this sort of piece of volume here, is that an area where this is actually now the start of a sell-off and we can start to move back down to these lows? And in that leg is where euro dollar could potentially short term go long back into the highs. So I'll be monitoring this closely, because obviously having euro dollar on watch today to see whether this does hold as a base and we start to get an impulsive move away, then that will tell us that there's more chance that if this starts to push impulsively, that we're going to start heading up to these higher points. And although not too far away, it can give us some good opportunities on something like euro dollar to look for the sells. So I'll be bearing this in mind a lot today because of having euro dollar on watch. And obviously we do have the piece of news this afternoon that we need to be aware of because of the volatility that can bring. So I'll be just seeing how these develop through today. But euro dollar, we actually look on the weekly, there is a potential. We have this little area here, which is it was kind of an expanding structure that then all of this followed. We've wicked through ever so slightly, but you can see on the weekly that there is the potential that, because last week's candle was this long bullish high test, that this week's candle ends up just filling that bullish wick before potentially we get any sell-off and we don't leave all of this space. So there is a potential that euro dollar can go long, but it's also bearing in mind that we've wicked through the area and closed back in by quite a bit, that this can just continue selling off, which is why I have got that sort of neutral stance at the moment, that this can go either way. More so that although we had this daily reaction yesterday, it's kind of not really from anywhere. It's not come from one of these main areas. It's just kind of done it in the middle of nowhere. So it could just be a more of a sharper pullback after these 3 bearish candles, which we would be expecting the 4th candle to be a pullback anyway at that stage. So all of this is still normal for it to continue selling. So it's now more so what the lower time frames tell us as to whether we continue looking for the longs or whether we have to actually flip to the sells. So we are at a kind of area on the left here. Obviously, the next one being at this point, but we are kind of floating around this area. We have come from an impulse, so we're sort of in the middle where this first point here is acting as the base. And if we actually get development here, like this, then I will see that as an obvious message that we can look for the risk entry for the long, impulse, correction, continuation. And at that point, the DXY will also have given us a similar message in the opposite direction of it would have most likely broken through that base and developed something underneath for the DXY to continue selling. And euro dollar would have developed a similar type structure on the 1 hour where we can then look for the risk entry and then play the long back up into the highs, which would be the weekly wick fill. So we can get positioned here with even a 10 pip stop. You've got good protection. The top of the structure, you're looking at 2.3, this inflection point 5. And then even if we fill, 90% of this area, you're looking at over 9 to 1, just in a simple move back up into the high to fill the wick. So this could be a really solid trade. The only other option is that the DXY does head long, holds the base, this drops through, we get a flag, and then we play the sell and manage down to there. Just very simple. So I'm going to wait for some development on this. If this starts moving off correctively, we could be getting our middle section to come down for the third touch, and then we can get long. And if it just impulsively drops through, we can look for the flag underneath, manage to this low, and then take it from there. So I'm neutral on this. I want to see how it develops. But there is good potential for the long and the short. So have to just see how that shapes up through today. Aussie yen. So we're now kind of retesting the back end of all of this previous structure. This is pretty corrective on the daily time frame. That although there's lots of red candles, if you look at the actual nature of those red candles, there's lots of wicks. It's quite a corrective move. It's not impulsive like this or like this. You can see it's just one by one. It's just correctively moved down. And you can see that on the 4 hour, how corrective all of this leg is into this base. So knowing the nature's corrective, this could just be acting as the kind of the sort of bow and arrow, like I've spoken about before, where price is getting pulled back, and then it's getting fired back up to that next area of value. So all I'm looking at from here, because it is moving correctively, it's difficult to try and time a risk entry, and this is a massive piece of price action anyway. So it's high risk trying to take a small little retrace at the low in the hope that it does this. It's too large of a piece of price action to try and time that, because this can just keep doing this and you never really know when it's going to end. So knowing we're retesting the back end of all of this kind of previous structure, all I want to see is a clear 1 hour push. So an obvious 1 hour impulse to the upside, something similar to this kind of leg here or this leg. So a clear 1 hour push. And then once we've got that, we can then look for the lower time frame structure to develop, and then either a risk entry or reduce risk, depending on what forms. And then we can look to manage up into the top of the range for 6.5. And then obviously we're looking at this bigger move for, over 10 to 1, even to the 90% area just from this leg. And that would be all of this volume that's built up into this base, turned around, flag, and then slingshot up to the next value area. So a simple insurance entry play for Aussie yen. So we wait and see if this turns around. Ideally, we get a break above this area, just in case this turns into a structure like this to actually continue selling off. Ideally, we get an impulse above that area, and then we get a flag around there, and then we look for the longs. So that's what I'm looking at on Aussie yen. Pretty straightforward insurance entry play. And now pound CAD. So the higher time frame, we're still moving in this 1, 2, 3 into the high that we've taken out, and we've clearly dropped through on the high time frame, and we've got some daily follow through. Yesterday's candle was pretty much, most of a retrace, but again, similar to euro dollar, it's kind of not from anywhere. If it was from an area like this, and we got this type of reaction from a base like this or like this, then different story, because that could mean that we're actually, moving to the upside, but it's not really from anywhere important. So having that in the back of my mind, I'm still looking for the sell on this, because we know that larger 1, 2, 3 move into the high has completed. We've kind of impulsed through all of that previous price action, and now it looks like potentially we're just forming some kind of V shape where price is just reaching back up into this area to get the strength that it needs to then sell back off down to this first key low. So with it being a V shape, for me, it's insurance entry only. We can see this little pocket of volume, this flag that dropped out last week. Price is now potentially reaching into this to grab the volume it needs. We can see here that price has near missed and just wicked to this area. So this is where you can get caught in the early sells, where you get this type of sort of evening star formation that we can see. You take the trade under here, stop above, you're then tagged into the trade. Price scoops back up, takes the area out. You're taken out for a loss, only for price to come back in, give you the flag. You then miss that. You take the -1, and then you miss out on +4. So you want to see areas completely taken out and not just wicked to like this, because that can mean a premature sell-off, almost like a mini kind of sell trap. So all I'm looking for is for price to come up and completely fill the area. It might even wick above, come back in, and then we can look for that lower time frame flag to take advantage of the sells and then manage down to that base. So if we can get in, even a 15 pip stop, for if you wanted to play it safe with good protection, just down to the base, you've got 8 to 1, and all you've played is a V shape with an insurance entry to mitigate this to keep going. You played the insurance entry and you've still got an 8 to 1 just to the first inflection point. So there's a lot of range to play with here to the downside, especially with the fact the higher time frame is in, and we're playing the idea of that larger 1, 2, 3 move that broke the highs. We've pushed in, smaller structure, committed, price has exhausted itself. He's had to come back up to collect volume. We get the reaction, confirmation with the flag, and then we continue with the sells. So similar to Aussie yen, where I'm only looking for the insurance entry for pound CAD, but I want to see this high taken out, this area fully washed out, and then price comes back in and gives us the flag first, and then we can look to play the sells. So that is an insurance entry. Aussie yen, obviously insurance entry, want to see that clear push to the upside and an impulsive leg, and then we can look for the flag. And then euro dollar, does this hold as a base and we get a corrective move off and we find that top, and then we can look for the risk entry? Or does the DXY take over, we get a blast through the low, and then we look for that flag underneath and then manage to the first inflection point? So very simple pairs on watch for today. Obviously, as I said, we've got those pieces of news to be aware of through today, this morning and this afternoon. So just be aware of that, and we'll see where these develop through today. So I hope you enjoyed, and I will see all of you as normal tomorrow morning.